Hi there, Phil Rogers, Lauren Hall here from Loan Market Edge, coming to you with our first weekly wrap for 2022. What feels like it has been quite a break, which we didn't get. It's just been a break from the video. So sorry to keep you all at home waiting to hear from us and see us as always. But yeah, we thought we'd loop back around and kick the process off this week and say hello to everyone. So clearly you can see who had phone appointments today in the office and who actually had Zoom appointments. So not much has changed. Let's kick off with, well, I was going to try and say positives, but interest rates moving. If you haven't been watching closely or listening to us, the fixed rates have been, unfortunately, I was going to say skyrocketing, but probably just moving at a pace where the last maybe 8 to 12 weeks, some banks have moved maybe 4 or 5 times already. Lots of talk around if you had been considering it, if you've been looking to refinance. Want to talk a bit about that?
Yeah, absolutely. So just understanding that.
Trying to look at that. We're trying to let you talk.
No, I feel like it's bad news. Then you flicked it straight over to me. I know how this works. So if we go back to September, October last year, there was those discussions around the 4-year fix, the 3-year fix, the stuff that had the ones in front of it. The reality now is that's probably 2% higher than that. You're probably looking at mid-3s to high 3s. So it did move quite rapidly. Some banks did 4 or 5 sort of transitions to get to that point. So refinancing, yes, if you've been procrastinating, because yes, it's hard. Yes, there's paperwork, we understand. But the reality is you need to move really quickly on that or you will miss the boat, because we're starting to get or move closer to what we were looking at pre-COVID. So it just would be a shame to miss out on these great low rates that we've had.
Big jump, 1.99 to 3.99 in the space of 4 or 5 months. Yeah.
Do you want to do some quick maths for us?
I'll
do it. It's all right.
One you prepared earlier.
No, I was actually talking to some people earlier in the week about this for their situation, for example. So, looking at repayments on, it's a big loan, say $1 million. They were around $850 a week, probably closer to around $1,100 a week now. So just gives you an idea of how much of a shift like that does impact repayments. If you were house hunting that November, December and haven't found anything, I'd probably say touch base with your broker, your bank, probably going to be us. And just say, hey, okay, can we just maybe go through those repayments again just to make sure they are in line with what your budget was, because they have shifted a little bit. And refinancing, yes. But there's good news with refinancing, which will be back to you.
Well, actually, just remembering on those rates, if you are doing that stuff, remember to ask about rate lock. Remember, there is an opportunity to lock in that rate, to pay a small nominal fee, to guarantee that rate between sort of the time of lodgement and up to 90 days. So if rates are moving like this, you can secure that rate, have it locked in, and know that you can sleep comfortably at night, knowing that that's not going anywhere.
At a price.
At a price, yes. Aren't they generous? So generous, the banks are. Yes. Cashback offers. Banks are pushing those again with the or cashback refinance rebates, whatever we want to call those. Yeah. The banks are back out and about on the front foot with these. So again, coupled with the reduced or cheaper interest rates with a lot of banks at the moment, getting that cashback offer as well, it really just makes it the best time to re-explore this. If you haven't done it or thinking about doing it, now's obviously a great time to do that.
It's great to offset some of those costs with refinancing.
And so remember, it's not all just about fixed as well. So we've now got this, from a variable point of view, remembering there's still variable rates at 1.99, 2.19, 2.24. There's a lot of good banks in that space. Very much a rate for risk piece. So depending on your risk to the bank will depend on your interest rate. The bigger the deposit or the bigger the equity in there, the lower the loan to value ratio, then the lower the interest rate. So we can really leverage that. Not great for some banks that don't do tiered pricing. So some are at 95% and you get the same rate at 65%, and that's great if you've got 5% deposit. But for a lot of these banks now, you hit that margin, there's sort of 4 tiers, and you might get owner occupied, principal and interest, borrowing more than 250 and below 80%. If you get all 4 of those, suddenly you go from a 3.85 at 95% to 2.19. You're always halving that based upon the deposit piece. And again, it's knowing which banks on the right day, which bank to talk to. So that's where we come in. So a lot to take in there on the rates, but that's really important. It's not as easy as just, I'll just chat with my bank, they'll get me a better rate, because there's every chance that their modelling isn't done to work the best possible way for you. So lots of good stuff in there. Other good news, obviously it's my turn still. Other good news, timeframes are improving across the board. So what had been a really probably tough period during that last couple of years, post-Royal Commission, getting hit with obviously COVID coming into play, best interest duty being introduced, there's just been a lot of pressure on the banks and on the client, I guess, with that process, the verification of documents, what that looked like. They were going through the 90 days on every bank account and line by line. You know, it was just really intensive to try and get that into the system. And then with the volumes, they got hit with things like the doc prep teams. Once you get the loan approved, then to prep documents, get those out. Australia Post was involved, I shouldn't say unfortunately. They were involved in a lot of that process as well, which meant they were well behind. And then certifications, once the docs come back, they had to be certified. There were so many things that blew out the opportunity to try and get something done in 30 days. It was getting really tricky, but the good news is that is speeding back up those approval timeframes. I mean, one of the majors has probably gone from 3 weeks down to 2 days. Yeah, which is really exciting. You know, lots of work up front still to get the client ready and make sure everything's there. But if we send in a clean deal with all of those documents checked and in the right place, then we can get those approvals very quickly. A lot of those lenders are now, thankfully, the year 2022, shifting across to digital documents when it comes to loan documents as well. Unfortunately, Queensland is still a little bit behind the rest of the country with a wet signature required for a title or mortgage document. But outside of that one document, being able to get through everything else means that we're not losing 4 or 5 days for those documents to actually get sent out. Yeah, we sort of get that. We have them in the inbox generally within a day. We do those online, sign one document, sending it back. It is really bringing that back a whole lot. So whilst the volumes haven't slowed down, that part of the process is getting a lot quicker, which is definitely taking a lot of stress off the process. But in saying that, the importance of talking to your brokers, you know, we've got lenders at the moment that are still going to take nearly 5 to 6 weeks to pick up a file. Yeah, and so if someone goes chasing a rate or you're approved with that bank or want to get approved, it's 6 weeks. Yeah, we've got other banks that can do it in 6 hours. Yeah, so we really need to be having that conversation at the beginning and understanding that process. So best rate isn't always in your best interest. Yeah, and being able to help manage or balance that out depending on your goals, objectives, and your timeframes, etc., becomes really important. So that's probably.
I think we did all right.
Yeah, right. You got to talk. Yeah, like there was. There's just a new year, new us. Yes. It's all happening. No, we had a great start to the year. I'm really looking forward. Team's growing, so some new additions as well in the Townsville and Gold Coast offices for us, which is exciting. So keep an eye out for some new faces, and really looking forward to a big year ahead. And we'll see you guys next week. Have a great weekend. Bye.